everyone, welcome to this week's weekly market view for Monday, the 4th of November 2024 to Friday, the 8th of November 2024. My name is Vishal. Let's get started. All right, so let's start off with the Nifty index. As you can clearly see that this is the 125-minute chart, and today we can see that price came very strong into this 125-minute level, rally-based rally, the level on top of level, and price exactly stalled there and starting to move to the upside. Now, if we look at the higher time frames, we are coming closer to a weekly level of demand. So it is advisable that one should avoid shorting as the price is coming closer to a higher time frame demand. The supply zones have nicely played out since last week, 24,398, 24,495. This was a supply zone that was plotted last week. So this supply zone held well, gave a nice move to the downside, but now we are into a level of demand. The open interest is suggesting that still Nifty could have a little bit of a further fall right up to these levels, that is 22,450. But because now this is going to be a level of weekly demand, we might see a little bit of a bounce here. And then if in case if there is any supply to the upside, then we might start seeing even more selling pressure on the Nifty. Let's look at the Bank Nifty. So on the Bank Nifty, we had this supply zone, then we had a strong rally up. So we're going to remove this level of supply. So this means that now our supply zone is still intact. Markets are going to be range bound on the Bank Nifty till and until this demand level breaks or this supply zone violates. So 52,818 to 53,308 and 49,966 to 49,642 are going to be the key levels to watch out for this week. Let's move on to the Nifty Financial Services Index. So Nifty Finance or Finnifty, as we want to call it, is also pretty much behaving like the Bank Nifty. Again, this upper level is intact, 24,443 to 24,619, and downside 22,300 levels to 22,864. As long as these levels are intact, we are going to expect to see a little bit of a wider consolidation with some volatile move because of the US elections results this week. Let's look at the MidCap Select. The MidCap Select has been taking us support at 12,275 odd level. We have the supply zone from 12,627 to 12,755. Again, a key level to watch out for. And pretty much in case if the market does break below 12,275 on a closing basis, then it's more likely that we will likely see a little bit of a more sharper move coming in on the MidCap Nifty towards the downside. Let's move on to the next index, which is the Sensex. So if you look at the Sensex now, Sensex is also more or less behaving like the Nifty index. I just go to the higher time frame. Let's say the daily chart here. Uh, 25 minutes. So pretty much from last week, this was the level that was plotted, 78,269 to 77,832. We do have one more level, which is also a very similar level on the Nifty. So we'll just plot this level also. So this is more or less a level on top of level scenario. Prices came back strongly into this level, but also stalled here and are now giving a little bit of a bounce. Now, whether this bounce is a genuine bounce or this is going to be more of a short covering bounce, only time will tell. There will be some supply zones on the smaller time frame charts. So it will be interesting to see how these supply zones play out on the smaller time frame charts. And if they start violating, that means probably demand is coming into play and probably indices will start rallying up further. The key level of supply still is 84,116 to 84,765, which is very, very far away right now from current market price. Let's move on to the next index. We are going to look at the Bankex. And this is the Bankex index. So Bankex is holding on to a level of demand, came again very, very close to a level of supply. Now, this price action or this price formation is indicating that there are still a lot of unfilled orders that are present around the supply level, 59,918 to 60,439. Unless and until these levels break, we will expect to see a more range-bound market on the Bankex index. Any move to the downside will get probably arrested again in these levels of demand. We'll get this level of demand out. This level of demand is already violated. But 56,901 to 56,552 are still going to be key levels. And as you can see today being the Bankex expiry, the open interest clearly suggested that 58,200 was acting as a key support, and that is the reason why 58,200 did not break, and it is still holding. So let us see now what happens in the coming days or in the coming weeks with respect to the overall indices. Thanks to all the global news, we also have the non-farm payroll data coming on Friday, and we also have the election results in the US. So it's going to be a very, very volatile week, which will also create a lot of excitement in the market in terms of some really volatile moves to come. One more important thing that I wanted to talk about, which we generally don't discuss in any of the sessions, is also having a look at what the IndiaVix is doing. So let's quickly have a look at the IndiaVix before we move on to the stock specific. Alright. So if you look at the daily chart now, you can see that I have had these levels marked since a very, very long time, right? And usually whenever there is some big news coming in or there is some big news announcement that is coming in, you will automatically see the India VIX rising. And what happens is once the India VIX starts rising, it puts immense pressure on the indices because the fear factor increases. So people want to go out there and hedge their positions or start buying put options and so on and so forth. So right now on the daily chart, we are close to around 16.69 percentage levels on the India VIX. And as the news comes closer in terms of the elections, etc., what is going to happen is this number is going to start increasing, and we might see this number probably going towards some key levels, right? So the first key level is going to be this rally-based drop on the India VIX, which is 20.37. So I believe that probably this week we will touch this level, and then probably what I see is that after the VIX hits this level, probably things will start cooling down. So all that has to happen in the market in terms of the big move is probably going to happen once VIX gets into these 20 odd 23 percentage odd level. And once the price level hits on the India VIX and starts to cool down, then we might again start seeing the indices rallying up to the upside. Okay? Again, these are just some educational ideas, which I think is likely to happen. All right, let's move on from the world of indices now to the world of heavyweights, and let's look at some of the key stocks. To start off with, we will start with Reliance first. So we'll look at the daily chart of Reliance, and we can clearly see that Reliance has hit a level of daily demand after the corporate action which has taken place to 1305.6 to 1281. Today we went a little bit more deeper, but then uh, there was some buying pressure which came in on Reliance. So now it will be interesting to see whether Reliance gives us a bounce from this level. If Reliance does bounce from this level, the first bounce will probably be up to 1350. If that breaks, then 1400 odd level. So not a very, very big move expected to come in Reliance, but if it does come, then it's likely that the indices will also start moving to the upside, especially the Nifty, since Reliance is uh, one of the heavyweights on the Nifty index. Let's look at HDFC Bank. Now, what is interesting to see is that in spite of all that is happening in the markets in terms of the selling across the board, we are seeing HDFC Bank pretty much holding nicely above the 1700 odd level. It took a lot of time for HDFC Bank to actually move above 1600 levels. But once it moved, it gave that very, very massive move. Then it again gave a very big corrective move to the downside. And then since then, it has been nicely moving to the upside post the earnings. Right now, if you see, we have a little bit of a bearish formation on HDFC Bank right now. We have seen, or we are seeing this kind of bearish engulfing candle nearly covering 3 days of price action. But we also see that 1700 is also acting as a key support for this market. So what will be interesting to see is where does now HDFC Bank start moving towards. So if it starts moving further to the downside, it will put pressure on Bank Nifty. But if it consolidates, remains sideways, or then starts moving upside to the upside, then 1770 to 1789 will be a key level to watch out for on HDFC Bank. All right, so let's now move from the world of indices, IndiaVix, uh, index heavyweights to the world of commodity. And let us see what the commodity markets are telling. So let's go to the commodity charts now. All right, so let's start off with gold first. I'm going to change the chart to gold. And by looking at the commodity charts, one can also gauge an idea of where the money or where the inflow of money is actually flowing towards. Right? So now, if you look at the gold chart, we had a very strong rally to the upside, and then closer towards the 80,000 to 81,000 odd level, we started seeing a little bit of a corrective. Now we are still in this level of demand. Maybe not the greatest level of demand, but still it is a level of demand. So it'll be interesting to see how gold now reacts from this level of demand. In case if gold starts moving up, it is probably going to put a little bit of pressure on the indices, including Nifty, Bank Nifty, and all the other indices. But if gold begins to crack down and starts moving towards 76,320 odd levels, then it will be also interesting to see where the equity markets are going to be heading. Because obviously, if money is coming out of one asset class, it has to go into some other asset class, right? And that is what is expected to be seen if gold breaks 77,000 to 780 levels to the downside. Let's move on to the next chart, which is silver. So on silver, we are seeing a little bit of a corrective move now after making uh, an all-time high and hitting that 1 lakh psychological level handle. Now we do have a level of demand here, 91,940 to 89,780. This is going to be a key level to watch out for. Nice open interest level also stacking up around this level of demand. So this is going to be the key level of demand. There is no still clear supply on silver, so we'll have to just wait and watch for any new levels of supply to be created. Okay, let's move on to the next commodity, which is going to be copper. So let's load the copper chart. And copper has again moved nicely, which is still this original level of demand is still holding. Came into this level of demand again, and now again giving a strong bounce to the upside. Now we are in a level of supply here, so we just got to be a little careful, but we have a much better supply level sitting up right here, all about this the sideways consolidation that has happened. 860, 870, 880. These are going to be key levels of resistance on copper before copper gets to 891,910. And to the downside, we have 830 as the first support level. We also have some open interest around the 800 odd level, which is nicely coinciding with this demand zone of 793 to 777 on copper. Let's move on to the next commodity, which is going to be crude oil. Crude oil, gauge what the key levels of crude oil. So, because of the war situation right now, crude oil prices are expected to increase. We are actually within um, this tested level of demand, which has been holding for a longest period of time here. And every time the price comes to this level, we have seen once, twice, twice, four times, nearly five times now, that price has given us a bounce from this level. So what I see is that 5,800 is going to be a key level of demand on support on copper on crude oil, and we do have an interim resistance of 6,100. But if that is taken out, then probably crude oil is more or less likely to move towards this rally-based drop area. This is going to be a key level for crude oil in case if there are any uncertainties or some kind of uh, a volatile move comes into the market, then we might just see market crude oil moving towards 65.73 to 67.47. The key level to watch out for demand 55.25 to 52.72 and supply 65.73 to 67.40. All right, now let's have a look at natural gas. Let us see what are some of the key levels on natural gas. So let me load the chart here of natural gas. And when we look at the natural gas chart, so we have supply here, and the price played out extremely nicely from this level of supply. The price just barely came into this level of supply, 250, and then hit all the way down. Came all the way down towards this level of demand, hit this level of demand, and now again is reacting to the upside. Now, probably what I'm seeing is on natural gas, we are probably trying to create what is called as uh, lower highs on the chart. And as long as a higher high is not printed, the trend of natural gas is still going to remain either sideways to a little bearish. So it'll be interesting to see now how natural gas reacts from this level. 240, 253 is going to be the level of supply. And to the downside, again, we have 196 to 185 odd level. We are still kept this level intact because we still see that 200 is the highest open interest level on natural gas. So pretty much this is it from me, guys. I hope you enjoyed the analysis for this week. If you do like our channel, hit the subscription button and do give your valuable comments in the comment section. Wishing you all the very best for this week. Take care, trade safe, trade well, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.